Hello and welcome to Money Matters. With digital technology permeating every aspect of our lives, digital currency is becoming a reality as central banks around the world study and test their own central bank digital currency, or CBDC. China piloted its digital renminbi last year, known as the ECNY, and hopes to have it in use by the time the Winter Olympics are held in 2022. How will having a digital currency impact our transactions and our lives? Central bank digital currencies, or CBDCs, are a digital form of a nation's existing fiat currency. They use the same blockchain technology used in cryptocurrencies like Bitcoin and Ethereum. This means transactions are almost real-time as settlements are built into the technology, so you don't have to wait several days if you're remitting money to someone in another country. And since it's part of the technology, transaction fees are much lower. How much savings might we see on transactions?
I think, could be save up to 30% to 50% of the cost. So that can be quite significant in terms of the whole transaction cost reduction.
According to the Bank of International Settlements, or BIS, 80% of the world's central banks are already conceptualizing their own CBDCs, with 40% building proofs of concept. Despite using the same technology as cryptocurrency, they differ in that, 1, they don't provide user anonymity, and 2, it's backed by a central bank. China is at the forefront of this movement. Last year, Phase 1 of an ECNY pilot test between the mainland and Hong Kong focused on mainlanders with e-wallets using the digital yuan here with businesses and banks.
We've completed that Phase 1 already, and it proves that technically it's very doable and the pilot is very smooth. We are now talking about Phase 2, and I expect that this Phase 2 will be completed this year, which is about two-way. One is, of course, we will expand the number of merchants that get into the test for the use of ECNY in Hong Kong, mainly to cater for mainland tourists or mainland businessmen. But the other way around, we've got Hong Kong people who actually either live or they travel in the Greater Bay Area or other cities in China, that they might need a ECNY wallet.
In 2014, China began developing their digital currency after cryptocurrencies like Bitcoin and Ethereum began making headlines. According to a speech by the People's Bank of China's Governor Yi Gang last November, almost $300 million has been spent in digital yuan as the government continues to roll out trials in Chinese cities.
China is really the first major economy that has moved to the pilot stage. The US and Europe still very much at the exploratory stage. And if we look at the mainland system, probably the big issues there are, one, the size, the fact that it's the second largest economy in the world, the largest country by population. So it's a major economy, and whatever they do will have an impact pretty much on everyone else everywhere. The second is the ubiquity of the mobile payments platforms, Alipay and WeChat Pay, and how the mainland system would interact with these.
The digital yuan isn't meant to replace Alipay, WeChat Pay, or even banks or credit cards. It's just meant to replace and provide cash with a digital one-to-one equivalent of the yuan. The expectation is that it will be rolled out in time for the Winter Olympics next year.
Buying a coffee or getting a taxi is almost impossible without Alipay or WeChat Pay, and without a Chinese mobile number, a Chinese ID, a bank account. So yes, this is a big objective of that. How do you put together a system that allows foreigners, visitors, the ability to have essentially a digital wallet for payments, which can then integrate into all of these digital systems?
There are two types of CBDC systems. One is an account-based system, and the other is token-based. In an account-based system, everyone has an account directly with the central bank, and transfers go directly from your central bank account to another recipient, with no third party involved. In a token-based system, users can have an account with a third party or bank, and tokens, for example, a $100 bill, can be transferred electronically between parties. Because of the digital technology used, transfers are almost instantaneous. China is using a token-based system which is meant to be interoperable with other payment platforms and financial institutions. The PBOC distributes the digital currency to commercial banks who distribute to their end users.
One of the attractions of a central bank digital currency for governments and central banks is it gives you a better tool to monitor economic activity so that you can better tailor your monetary policy, things like this.
This means stimulus like financial subsidies or unemployment relief, issues which came up during COVID, could easily and quickly be rolled out to qualifying citizens and businesses. The other use of CBDC is the trackability and traceability of it, which makes it a powerful tool against money laundering and other criminal activities. One of the issues with the greatest focus in the West is the issue of privacy, how a user's data is used and who can see it.
In Canada and Sweden. And what they're basically looking at are these sorts of protections whereby you might have a data collection process, but then to access that data, you would need something like a court order.
China, on the other hand, would protect users' data from private companies, but the government would have remit to access data in combating corruption, money laundering, tax evasion, and other criminal activities, according to state media agency Xinhua, what they call controllable anonymity. Another feature of CBDCs is the ability to program the currency. This means governments could set limits of how much money can be spent in certain places or how much can cross borders.
China has capital controls. It has restrictions on flows of money in and out. You can actually set it so that it only works in small values outside of the country, which then gives you much better control. So it's something that when you think about a digital currency, particularly the design of the Chinese digital currency, there's no real intention of making of liberalizing capital movements at this stage. And in fact, the technology allows you a better way to monitor that.
Both Douglas and Gary agree that adoption of CBDCs will likely pave the way for wider acceptance of crypto assets like Bitcoin and Ethereum, even though trading access is currently restricted in some jurisdictions.
The market, in terms of the understanding of the impact of the risk and also of the usage of those currency, would become a lot popular than before. So I think it will be more healthy to the market in general in the future.
If you have the central bank issuing a digital currency, it kind of gives legitimacy to the entire thing. It's now difficult for a central bank to say, all digital assets are illegitimate except ours. And so I think that is this ongoing process of normalization.